Hi, my name's Morgan Hart. I'm the Managing Director of Emerald Resources. I'd firstly like to thank 121 for allowing Emerald to present here today. For those of you that I met with at this event last year, you may recall that Emerald is an Australian listed ASX company that is currently developing its plus 100,000 ounce per annum Ocval gold project. Last year I would have been talking about having secured all funding for the project and commencing construction. This year I'd like to talk about the fact that we're approaching completion of construction and talk about where the company's going from in the future. So always the key question, who are we and why invest in Emerald? Well, simply put, we've got a great project that's nearing completion of construction. We're about to come into production in mid-2021 at a plus 100,000 ounce per annum run rate with a $754 per ounce cash cost projected. The project obviously clearly has strong economics. We think that our land holding and our tenure in Cambodia has a strong upside, and we have the right team to develop it. And our team's been together for many years. Our in-house operations and construction team in particular has been responsible for the construction of this will be the fifth gold mine in the last 15 years. They've all been at the low end of the cash cost scale, capital cost scale, and been all on time, on budget. So as I said, 100,000 ounce per annum, 754 cash cost. Obviously the $1,700 to $1,800 gold price. You get strong economics out of that. 486 million NPV and an IRR of 95% pre-tax. Significantly, the resource and the reserve are there's a high conversion rate of resource to reserve, and that's just based on the fact that we've only drilled this project to the first open cut, and I'll talk about why that gets bigger now out of cash flow as we go through the presentation. Team's done before, Australia and Africa. We're aligned as large shareholders. We own 22% of the company. We bought that position. We haven't given ourselves any shares along the way. So clearly we're motivated, along with all shareholders, to expand the company and grow the share wealth of shareholders, and we intend to do that by mine developments and exploration success. Cambodia itself is maybe new for some people in terms of an investment destination. We're very comfortable with our position, and we think we've substantially de-risked the investment by signing a mineral investment agreement with the Cambodian government. That agreement's been signed by the Minister for Mines and the Minister for Economy and Finance under what they call a sword norm, which is an authority signed by the Prime Minister. So the right signatures on the document. In that document, we get offshore arbitration in Singapore should something go wrong, and we get a standstill on law provision for the first 8 years of the project, in which if there are law changes that they won't affect our project going forward. US dollars is the primary currency in Cambodia. Freedom of banking onshore, offshore, so often a problem with a lot of the francophone countries, etc. in Africa. We don't have that issue here. In fact, Cambodia is only rated second behind Singapore in Southeast Asia for freedom of business, and it's basically because of that freedom of offshore and onshore banking US dollars. So the key aspect of our last 12 months has been construction, and the best way for me to show you how advanced we are in construction is really in expenditure. It's the easiest way for me to show you. I write and sign every check for the project, and at present we are 77% spent and committed in our expenditure on the project itself. With a $98 million initial budget, we are still forecasting to complete at $98 million late in the next quarter. Clearly that first 77% which has been spent and committed can't change. So we're de-risked in terms of a blowout on cost. Over 75% of the project, with only the last bit, the last Lego building block bit at the end. To simplify it, that's the only bit that could actually have any variation in price, and that's where we've excelled in the past in keeping costs on budget. What does that look like on the ground? Well, there's the Ocval plant. It's a 2 million tonne per annum processing plant. Tanks are up. The float circuit's in place. We've started to install the SAG mill. Crushing circuit is well over 75% complete. All of the ancillary aspects of the project are moving along with a first commencement of production late next quarter. In terms of power, The project's powered off-grid in Cambodia at 11 cents a kilowatt hour. The substation's complete. The 60-kilometre power line to the project is complete. The last thing we're waiting for was the installation of a transformer that's now been put in place. Our camp's complete and up and running, the 450-man camp. Our mining's commenced. Macca Mining, our earth moving contractor, ASX listed Macca. They've partnered us on many projects over the last 20 years. They're our preferred partner. They've hit the ground running here with about 85% of their gear already in country. They started mining late December. The key aspects of mining to date have been moving waste out of our open cut for engineering fill on the rest of the infrastructure required in Cambodia. At Okvau. Our tailings dam has commenced. Kiwi has now been cut, and as clay backfill has been filled back into to the surface level, and now it's starting to come out of the ground and building the tail turn out of the deck. We've had some success in looking for more mineralisation at Okvau. As I was saying, where do we go from after we come into production next quarter? Well, the key easy aspect is to expand on the Okvau resource and reserve. And if I point you to this particular page, you can see the long section. You can see this flat line sheeted vein swarms of mineralisation. That's gold, arsenopyrite, pyrite mineralisation. Those stacks basically don't change from the top of the deposit to the bottom of the deposit. The only thing limiting them is the lack of drilling at depth. You can see there's already some intersections that extend below our open cut, 10 metres at 9.6, 11 metres 8.4, 3 at 14.2, 6 at 11.4, all underground style intersections. Deepest intersection to date, 6 at 9.7 grams, is out in the Warmfells metasediment, traditionally the weaker of the mineralised zones. It doesn't take much imagination to see if you extend another one of these flatline sheeted vein swarms up into the diorite, that 6 at 9.7 becomes another one of these, hopefully another one of these mineralised zones. If we keep drilling the project and the diorite to depth, then we'd expect we'll still keep seeing the same geometry and geology at depth if the diorite continues. Excitingly, as well at Okvau, we think we've identified a high-grade feeder zone on the eastern side of the deposit. That's already got intersections in it. It's 16.9 at 10.87, 9 at 13.23, 9 at 9.27, etc. inside the open cut. Where they extend below the open cut, and we've only just started to scratch the surface of potential more mineralisation in these areas. We've already had things like 15 metres at 11.92, 8 metres at 19.98. They will come in as part of the next open cut, but clearly this high-grade feeder zone, vertical feeder zone, is got potential to basically expand to depth and along strike and add open cut and underground targets and mineralisation. Well, the other upsides for the project, and we see additional ounces coming from us. We've now grade controlled over 25,000 metres in the pit, in the oxide zone and in the hard rock zone. The oxide only averages about 7 metres depth. We're in the hard rock zone here, which I'm showing on screen. We did about just over 10,000 metres of drilling on a 10 by 10 metre pattern into that top 25 metres of depth of the project. We've got basically, in comparison to reserve, 22% additional ounces, majority of that coming in additional grade. The intersections highlighted on the left-hand side of the page there, including 10 metres at 13.92, 20 at 6.84, and 11 at 11.7 grams are clearly pretty significant mineralised zones, and what we're going to be mining in the first 6 to 12 months of the project. Regionally, we're very excited. We've got 1,239 square kilometres of tenure in Cambodia. We've got intersections all over that ground, some historical, some our own. We've got Sam Nang prospect only 400 metres away from the mill with 9 metres at 6.6 from surface, etc. That obviously will get a lot more attention over the next 12 to 24 months. We've got our Uptong and Prek Long licence just to the south of Okvau. It's within about 12-kilometre arc of the actual open cut and processing plant. Historical selected intersections of 3 at 8.9, 4 at 10, 3 at 12.9, etc., all open cut depths. And the thing that's really exciting as at present is the government seeing fit to award us the Memot licence down at the bottom left-hand corner of that slide. That Memot licence is about 75 kilometres from Okvau, but certainly giving every indication it may well be a standalone project. What we like about it in comparison to Okvau itself is, if you look on the left-hand side, you'll see the footprint of Okvau as seen from the sky with the illegal miners in 2011 at exactly the same scale, exactly the same style of illegal miners. You can see exactly the same footprint on the Lamont project, basically in the last couple of years. We have some historical rock chips on that in that area with grades going 72, 74, 83 grams of gold. Also having coincident copper assays up to 11.8%, and having coincident silver assays up to 354 grams per tonne. Pretty exciting prospect for us. We obviously need to get in and drill that in the new dry season coming at the end of the year. We have to complete what they call an initial environmental impact assessment before we can commence that work. That work's being undertaken at present. So in essence, what are you getting if you invest in Emerald? Well, you're getting a project and a management team that's done this before, and we're well advanced on the Okvau project and doing exactly what we've done in the past, bring the project in on time, on budget. It's a very exciting single pit 2 gram open cut with clear potential for increase of more open cut reserves and a depth. We've got a great land holding near mine and within the district where we'd expect to be able to potentially add more ounces to Okvau, or indeed get additional mining centres, development of another mill or second mine. The project itself has a very strong financials, high IR and NPV. We've got the team in place to expand on our current reserves and resources, and we're clearly looking to do that. And that's our upside case, is that we develop another mine or 2 mines in Cambodia, and we certainly use that in-house skill to try and develop something in Australia, which we've got our eye on many projects at all times, and we're obviously keen to try and add a second or third or fourth project in Australia over time. So thank you very much. I look forward to meeting with some of you individually through the course of the conference. Thank you.